Let me start by dispelling some myths, because a lot of people say, well, real estate is not passive. Well, either is stocks. There's really no true passive income where you can just make money and not do anything. You're gonna have to have some sort of oversight. This is how I got started. In the beginning, it was anything but passive. It was a big headache, a huge time commitment, and a big stressor on my life. Today, it's not. Now that I've learned the ropes, now that I've built a team, now that I've built a portfolio, I've built my skills, it is significantly more passive for me. So you got to understand that with anything, it's going to take some work to get started. But if you can build the systems, you can build the processes, you can build a system where now you own the assets, and then you have a system where these assets pay you every month or every quarter, and you don't have to spend that much time really worrying about it. What you're going to be doing is you're going to be overseeing them. You got to do that with your stocks. You got to do that with your real estate. But you don't have to physically go do something. You don't have to go out and plunge toilets. You don't have to go out and talk to tenants. You don't have to go out and lease out the properties. You can hire people to do these things and make it fairly automated. And I'll show you what that means. But you got to understand that in the beginning, it is going to take work. So the way the real estate investing works for me is I will go out and invest in some property. It might be a single family home. It might be an apartment complex. And the reason why I'm buying this property is not for me to live in myself. It's for me to rent out to other people. So what that means is I'm going to find this nice couple right here, this guy with a mustache, this lady with a nice braid. In my native language, Punjabi, we call a mustache a much. We call a braid a gut. So now these people are going to come in and they're going to live in this property that I own. In exchange for them having this place to live, they're going to pay me rent every single month. But here's the interesting part about it. I don't want to know who these tenants are. I don't want to have to talk to the tenants. I don't want to have to get the complaints about things that are wrong in the property. I want to have a system where it is passive and money still is hitting my bank account every month because there's enough margin in this property to pay for all the expenses. What are your expenses? Your property taxes, your insurance, your maintenance, your management fees, your vacancy costs, and then put some money in your pocket every single month, and also cover your mortgage if you have one. So just like I did with stocks, let me start by talking about the theory, then let's get a little bit more practical. The reason why a lot of wealthy people and people who aspire to become wealthy like real estate is because when you invest in real estate, you get three things. Number one is you get cash flow if you do it correctly. That's the key, because a lot of people, unfortunately, don't do it correctly. Number two is you own a hard asset. When you own real estate, you have something that you can see, feel, and touch. If you go out and you invest in, almost dropped that, the Verizon stock, you just have a piece of paper that says you own some of the Verizon company. If you walk into the Verizon store and you say, hey, give me a free phone, you're not gonna get anything out of that. So when you own real estate, you own the bricks, you own the land, you own the windows, you own the things that you can see, feel, and touch. And then number three is you also get tax breaks. As an attorney who's not your attorney, what I can tell you is that real estate has some of the biggest and best tax breaks that a tax code has to offer. What does that mean? Now, when you get this cash flow, right? If you make $10,000 in profit in cash flow from your rental property, you don't have to pay taxes on all $10,000. Why? Because the real estate tax code says so. The real estate tax code says that you can depreciate certain things on this property. What that means is you can tell the IRS, hey, I made $10,000 in profit, but because my property is 1 year older, I shouldn't have to pay taxes on all $10,000. Maybe you only pay taxes on $5,000 because your property is 1 year older. Maybe you pay taxes on $0 because your property is 1 year older. If you enjoyed this clip and you want to continue your financial education journey, I have another video that I think you'll love. All you got to do is click that button right over there. And for those of you who want to stay up to date on the top finance and business news, you can join Market Briefs, my free financial newsletter, by clicking that button below. Thank you for watching, and I'll see you in the next one.